the US Federal Reserve cut interest rates by 50 basis points this week and signalled that more cuts are likely at its final two meetings of the year. Other central banks have been cutting rates too, including the Bank of Canada, the Reserve Bank of New Zealand and the Bank of England. But here in Australia, the inflation dragon's yet to be tamed. Joining me now is Professor John Quiggin, VC Senior Fellow in Economics at the University of Queensland. John, thanks for your time. Let's start with the Fed cutting rates. How significant a moment is this in the current economic cycle?
Well, quite a big one, I think. Cutting rates, they prefer to move, of course, by a quarter of a percentage point, 25 basis points. So in some sense, announcing very suddenly a 50 basis point cut and for further cuts to come really suggests that as much as central banks ever admit getting things wrong, they've left it too late to cut, and they should have really started cutting earlier to reduce the risk of recession.
Yeah, if the Fed keeps cutting as expected, I mean, what impact could that have here on Australia's economy and the currency, the Aussie dollar in particular?
Well, it would have some currency implications, but I think the big effect is leaving the Australian Reserve Bank as very much the odd player out in terms of making these judgments that, of course, those other countries have achieved mostly somewhat lower inflation rates. But the fact is that the risk is still there of a significant economic downturn globally. That's why the Reserve Bank has moved. Why the Federal Reserve Bank has moved so vigorously.
Yeah, the RBA obviously board meets on Monday, the cash rate decision on Tuesday. How much pressure do you think is starting to mount on the Reserve Bank when you see all the other big central banks around the world cutting rates and the RBA seemingly keeping things on hold?
Well, I think certainly the pressure has shifted. The RBA, like all institutions, has an outlook for its own institutional survival, and pretty clearly the combination of the Federal Reserve cuts and the dispute, however you like to phrase it, with the Treasurer a couple of weeks ago suggests if they hold on, as they've been talking of, and there is a recession, there's no doubt where the blame will be shifted.
Yeah, well, you talk about the recession over in New Zealand, for example. Their economy dipped into recession. It was one of the main reasons why the government was turfed out. Obviously, Treasurer Jim Chalmers and the federal government don't want that to happen here.
No, and of course they would share in the blame as well as the Reserve Bank, but there's no doubt that that's where they would be pointing the finger, and it might be rightly so.
Well, look, this week the unemployment numbers were stronger than expected, about 48,000 jobs created in August. I mean, does that take the pressure off a bit from the Reserve Bank's point of view, with the jobs market in such a good place despite the economy being pretty weak?
Well, of course, things can turn badly pretty fast. That's I think the big issue. We've of course had negative per capita growth for quite some time, so the economy is lots of mixed signals there. But I suppose my view with unemployment figures is we've really waited 20 or 30 years to get to this low unemployment, and I think we should be placing a higher priority on maintaining that than on rapidly returning to an essentially arbitrary inflation target.
And where do you think the unemployment rate needs to finally end up? Where's the sort of magical full employment number in Australia?
I think we're pretty close to it now. It's been around 4%. It's clear that that's been sustained without big pressure in the labour market. So what we're seeing really is workers being punished for inflation that really originated elsewhere.
The other big thing that's been going on the past sort of year and a half has been the RBA reforms and this new legislation to create a separate monetary policy and management boards at the Reserve Bank. That's yet to pass through Parliament. Compromise, though, could be reached soon. But how important is it here to have bipartisanship support with this legislation?
Well, without bipartisan support, it's unlikely to happen, I think. But I think I'd say that the review of the Reserve Bank was a missed opportunity to actually look at what the Reserve Bank does in terms of policy, rather than essentially these second-order structural issues that obviously interests of economists, since we'd like to have a board made up of economists guiding monetary policy. But I don't think it would make much difference in the end to the outcomes. And at this stage, well, they've given up on the most dangerous recommendation, which was that the Treasurer should give up the veto power, which has been maintained ever since the Reserve Bank was established. So my expectation, in fact, is that they won't find a landing spot on this, that one way or another, the opposition doesn't gain much from giving the government a win here.
Look, next week, the monthly inflation indicator for August comes out. Inflation could fall to 2.7%, and that's within the RBA's target range. I mean, how long would the RBA want to see inflation within that range of 2 to 3% before cutting rates?
Well, really, they should have been cutting rates earlier. The whole point of monetary policy is it works with a long lag. So by the time you've reached a target, you've already put in place measures which are going to push you along further. This was the argument being made in the US in relation to the Fed, that they shouldn't wait for a sustained period of low inflation and then fix monetary policy. They've used the instrument. It works with a lag. They should be taking the brakes off now.
And also, I guess it's worth noting that monthly indicator is not a completely accurate measure of CPI. So, I mean, how reliable is that number?
I find it all useful, I have to say. It's really comparing this August number with last August number in a way that I have to admit makes no sense at all to me.
And look, the target itself, 2 to 3%, I know you've been a bit of a critic of that target. I mean, what's a better system, what's a better thing for the Reserve Bank to aim for here?
Well, first thing, if we are to stick with an inflation target, we really should have a target of something like 4%. That gives room when the Reserve Bank needs to stimulate the economy of cutting rates a substantial amount without hitting the so-called zero lower bound, which, of course, we hit during the pandemic. Much of Europe was stuck there for years after the global financial crisis. And really, the issue isn't any kind of theoretical challenge. The great majority of economists who've looked at it from outside central banks think a 4% target would be a good idea. It's that the politics of it is too difficult for the Reserve Bank to handle. They can't do it now because it would seem like admitting defeat. They can't do it when inflation is below the target range because it would seem kind of pointless. And when it is in the target range, they're happy to coast along congratulating themselves.
One other thing from the review was having the board members of the Reserve Bank at least saying who voted in which direction, not identifying them, but giving a number of votes. And we saw at the US Federal Reserve meeting this week, there was one board member that thought 25 basis points was all required. The rest said 50. Is that a good idea to have that voting in place for future cash rate decisions at the Reserve Bank?
Well, certainly the US example isn't very encouraging. You have one person, a Trump appointee. There was immediate speculation that they were doing it for electoral purposes rather than because of the because they thought it was the right decision. You know, they had previously been pretty dovish. So certainly that's not a very encouraging precedent that we might have people second guessing who had cast the wrong vote and why.
Yeah, I mean, we've obviously got the election coming up in America in November and then potential Australian federal election by May. How much does politics play with the Reserve Bank in those board meetings that they have?
Well, of course, I have no inside knowledge. My guess is that I'd be extremely surprised if there was a significant impact from electoral politics in the sense of board members trying to get the decision that would favour a particular political party. As I say, the real issue is that the Reserve Bank is itself necessarily a political institution. So when they make these decisions, they're not saying in the abstract what would the best interest rate be for Australia at this very moment. Not only that, anyway, they're also saying what will be the repercussions for the Reserve Bank of making this decision or the other one.
Well, Professor John Quiggin from the University of Queensland, thanks for coming on the show.
Thanks for having me.